Show them the dish, don't keep on giving them the recipe, which means just don't talk about the nitty-gritties and the details about the product and stuff. Talk about the broader aspects. The first meeting, your objective should be to get the second meeting. In a 30-minute presentation, nobody is ever going to make a decision of investing in your company. The only decision they can make is, should I call this person for a second meeting and a detailed meeting at a 2 or 3 hour? At that point of time, depending on what they call you for, saying, okay, we'd like to understand more about your technology, sure. Take your head of tech, take all the material and spend enough time in drilling down on the technology. Or if they're going to talk about processes, about this or that. But the first meeting's objective should be about saying that, hey, these guys know, the investor should go back with the feeling, say, hey, these guys, this was a great team, I think I like them, I'd like to call them for a discussion, and that is all your focus as a thing should be. Since investors look for the business around the concept, your presentation to them should be covering these following points. And my presentation will be available, so no need to make the notes, etc. First of all, it's important to talk about what is the concept. What are you going to do? And when you talk about the concept, is it about what is the idea, what is the need that you're servicing, or an opportunity that you have, who's going to be buying it, and so on and so forth. Business model. Business model is about who will pay how much, at what time, and to whom. I mean, that's essentially what the business model is about. But that's the first part that you need to take. The second part is about what is a business case? What a business case means at a unit economic level. What does the economics look like? So I'm making shoes and I'm making this for 800 rupees and I will be able to sell it at 1500 rupees. So I'm making 50% margin on my sale price or 100% on my cost price, and that's the unit economics. And a lot of times entrepreneurs spend time on the unit economics, but you need to understand the economics of the business. How does this entire thing translate into, say, your annual, in 3 years' time, how many shoes would you be selling? And now, understandably, you're making about 50% gross margin on a shoe. But hey, have you taken into account the cost of unsold goods, damaged goods, returns, and dead inventory and stuff like that? And now when you calculate all of these costs together, including the cost of customer acquisition, the cost of people, cost of resources, and other investments that you would need to make, how does the business case look? The mistake that a lot of entrepreneurs, first-time entrepreneurs make is that they try to advance the profitability of a business as much as possible. And often we hear, oh, in the 9th month itself, we will be profitable. My experience is it is very, very difficult to build a scale business at quick profitability. Of course, if you are able to be profitable, try to optimize as much as possible and try to be profitable as early as possible, but not at the cost of scale. Investments are required, and it is often you have to invest ahead of growth, and it's perfectly all right to be able to do that. So you talk about the business case. You have to talk about the size of the market opportunity. Now, the size of the market opportunity is different from what your plan about is. And I want to, in second year, I will be this much, third year, I will be this much. That's one thing. But the size of the market opportunity, and the size of the market opportunity is not about a report from Gartner or Technopack and saying that in 2020, the market will be $20 billion according to Technopack report. Here's the report. It has to be ground up. It has to be simple. It is saying that, look, I'm selling these things I'm selling, say, for example, this digital pen for 5,000 rupees. I think in corporate India, I think there are 2 million people who will probably have the potential and the need for this kind of a pen, and therefore my market only in India is so much. That's as broad as is enough for you to say what the size of the market potential is. And likewise, in all other businesses, you can put together a thing. At some stage, when your company grows and stuff like that, that Technopack report and all that will be relevant, but not at the initial stages. Abhi $20 billion का market होने से आपको क्या फर्क पड़ा? Your next year is not going to be more than 5 crores. Now, whether it's 5 crores or 3 crores or 4 crores, that 20 billion, it doesn't matter. How you will get to that, the first level of hurdle is going to be important. What is also important is the current status. And the current status could be, I've left my job, I'm now full-time into it. Or we've done market research, we've spoken to customers, they've given a good feedback. Or I've got this proof of concept, I've done this, I've tested it. Whatever that current status is, important to do that. The reason why current status is important, because every time an entrepreneur is speaking, the investor's thing is, what are the risks that are taken off the table. As many risks that you have been able to take care of, their confidence of investing in your goals. Most importantly, as I said, this is about the team. Now, the team is not about saying, my name is so-and-so, and this is my educational qualification, and this is what I have done, and I've worked with IBM, and I've worked with Infosys, or I've worked with DTDC, or whatever. What have you done in that, and what have you learned in that, that you bring to this company is more important to people. And like somebody was talking about in the morning, is IIT, IIM, and all of these things important? I don't think it is important at all. I have never seen any investor look at, say, oh, IIM, this must be good. This is about saying that, oh, that person was so sharp. He knew everything about the business. He had got, oh, I asked him this question, and he knew. The answer may not necessarily be accurate, but at least it was in the right direction. Is comforting to people. So when you talk about the team, you could talk about what you 3 or 4 people or 1 or 2 people that have got him. You can also talk about saying, I have also spoken to 2 other friends. They currently can't leave their job, but once we have funding, they will come in, and this is the value that they bring to the table. No problem at all. At early stages, that's acceptable as well. You talk about competition and risk factors. Competition is not about who else is doing exactly what you are doing, but competition should be defined as what is the customer currently doing to address the same problem. So if you're starting, say, for example, a resort somewhere, it is not about, oh, but in these hills, nobody else has a resort. Your competition is also the World Cup football match that is happening, because of which nobody may come to your place. So you have to understand competition, and you need to be able to help the person understand how you are de-risking your business from whatever competition can have. More importantly, when you're talking investor presentation, you need to talk about how much money you need, what will you use that money for, and where will that business take you. And the last, but one of the most important points that you need to understand is investors need an exit option. An exit option, when spoken about, is understood very wrongly by people. Exit option, people think, no, but I don't want to exit. I'm building this company for life, sure. But what does an investor or a venture capitalist or an angel investor do? They are putting money in your business, and they're taking equity. Nobody ever makes money by buying equity. They make money by selling equity. You may buy shares of Bharti in the stock market today for 340 rupees or 330 or whatever that price is. And it means nothing. Even if that stock price goes to 500, it means nothing unless you are able to sell that share to somebody else. Now, in public markets or listed companies, you can sell on the stock exchanges. In the case of startups and early stage companies that are not listed, you have to find somebody else who will buy that equity. In some cases, it could be the next round of investor. In some cases, it could be strategic people who will buy the company. In rare cases, especially rare in India, you may go IPO. But you need to be able to explain to people where they will be able to sell to whom they will be able to sell their equity to. So investors look for competent and committed teams. They look for passion and deep interest in the domain. Why is this important? And the reason I'm putting this point is because there are a lot of people who come in with an opportunistic view. Oh, healthcare or education का आजकल थोड़ा चल रहा है, तो मैंने सोचा इसके अंदर business कर लूँ. Now that doesn't work for entrepreneurs. You may do a good business, but it doesn't work for entrepreneurs. Why? Because entrepreneurship and building a business is tougher than what you think on, and certainly tougher than what your Excel sheet suggests. It is 2-3 hours of rigorous hard work, often going against whatever your assumptions and plans were. If you don't have passion and commitment to that domain, you are likely to give up and say, "Chhod do yaar, iska kaun karega, bahut mehnat hai, this is not what I had thought about." And therefore, people seek investment. It doesn't mean that you won't be able to build business without passion. You can. But unlikely that investors will invest in that kind of a business. And more importantly, in teams, they seek people who understand the domain, not just a passion for the product or the concept, but what do you call, understanding of how the dynamics of the business work. They look for people with large aspirations, but with practical milestones, which is saying that I want to be a 500 crore company. Great, you want to be a 500 crore company, but you can't go from PowerPoint to 20 crores next year. No matter whether you want to become a 50 crore company, 500 crore company, or 5,000 crore company, typically your first 12 to 18 months will be exactly like that. It will be like that. After that, wo 20 hota hai ya 25 hota hai ya 200 hota hai is a different issue altogether. But the first 12, 15, 18 months are most likely to be similar. So you have to have practical milestones, but you still need to have large aspirations if you're going to people. It is difficult to do even one thing. Often entrepreneurs come back saying that ye bhi kar sakte, wo bhi kar sakte. I have this customer segment, or I can do B2C as well as B2B and stuff. While that may be right, you could address, your concept could address maybe all these customer segments. At the beginning of the journey, because the resources will be limited, you will have to pick one and build a business around it. It is okay to leave something on the table and say, I'll come and address it later on. Strategy is not about listing everything that you can do. Strategy is about identifying from among the various choices that you have, picking up one thing and saying that this is what I will do, and then aligning all your resources and your plans to deliver on that one particular goal. A lot of times people look and say, team was great, the product was great, market was large, but they're just doing too many things and not willing to listen to focus onto that entire thing. And it's tough as an entrepreneur, I can understand, tough as an entrepreneur to give up saying that, shit, this looks really lucrative, how can I give this up? If I give this up, somebody else will come and do that. But operating or operationalizing something that you've thought on concept is very, very difficult, and unless you have focus and rigor on focusing on one, it becomes very difficult to do that. Sure, you can have the opportunities and you can say, look, the potential of the business is this. For the next 2 years, I'm focusing on this, and once I have the resources and the sustainability, I can figure out which are the other businesses to go after. Investors look for people with a strong implementation plan. Like I said, it's more important to say, what am I going to do next month? What am I going to do in the next quarter? And so on and so forth. And to be able to do that. So the Gartner reports, by the way, and all of these kind of things which a lot of entrepreneurs do, it has absolutely no meaning, especially in a country like India. Everybody knows that no matter what you do, the market is very large. Very, very large, whether you're selling super premium products, there is a market for that, whether you're doing bottom of the pyramid or anything in between. I mean, if we were in Sri Lanka or in Italy or Spain, we could understand the agony or understanding, are there enough people to buy this? In a country like ours, this really has no meaning to anyone. Immediate goals and milestones is, you need to be clear about what you're going to do and how you're going to be, going to go about it. You also need to have a clear understanding of how much money you will require for that phase of your business, what it is going to be used for, and once you deploy that money, what is likely to be the outcome? Where will you reach from here to there? And typically what you should ask from VCs is one stage of investors is as much money that would take you to be attractive to the next level of investors. So for example, if you're at a concept stage and looking for angel investors, you should look for capital that will make your business attractive to VCs, which means the assumptions should have been proven, the product should have been tested, you should have experimented with price points or so on and so forth, usage patterns and stuff, and got an understanding of saying, okay, now I've understood what happens on this. The matrices that are underlying the business case should have been proven. Remember that 99 out of 100, not 9 out of 10, but 99 out of 100 businesses require follow-on capital. Yet, we see a number of business plans come and saying that after this round of funding, I am not likely to require more capital. You have to invest ahead of people often give the example, no, but Instagram got so-and-so or so-and-so company got millions of users without having to advertise. What are you telling me? You need to invest money in marketing, etc. All that is fine, but exceptions don't make the rule. I'll be happy if your company gets to that millions of users or becomes successful and ET carries you on the front page and suddenly you become very profitable. But you can't plan on the basis of miracles happening. You have to plan for the worst case. Most often than not, Excel sheets are done by entrepreneurs to satisfy them on the best case. And that's good to sometimes do it. Do it for your own joy, but for your own safety, work out a business plan on the worst case scenario to figure out how wrong can you go on to this front, and therefore what protection do I need to have in the business to be able to do that. Um, honest entrepreneurs, and that honesty is not something that you can, sort of say, I'm honest. I mean, this comes across when you talk about being honest about what you know and what you don't know, what you have learned and where you have failed, what are the pitfalls, including saying that, look, we're building this product for enterprise sales, but, between the team, we've never done enterprise sales, and that's one area that we need help in. Angel investors and early stage investors are participative investors. They invest so that they are able to also guide you within that. Trust is very, very important at the... So in summary, this is about investors investing in a business, not a product or a concept, no matter how innovative it is. Innovation is interesting to have, but certainly not a sufficient condition for success of a business. You will need to have a high quality team. I have rarely in my 10-15 years of being in the startup space seen anybody invest in a single person team. And the reasons are simple, because it's hard to be an entrepreneur on your own. It's very, very lonely, even as 2-3 people team. If you're a single individual, it's even more difficult, and the risks are stacked up. And to be brutal, I mean, what happens if you die tomorrow? That's also a risk, right? I mean, all of these have to be taken into account. You have to have a 3 or 4 people team to keep your motivation levels up, emotional things up, and to share the responsibilities in doing that. That's all. So the first meeting should be all about saying that your objective should be about getting that next meeting, Nobody is going to write a check and saying, okay, this is interesting, let me fund you in the first one. Just to give you my passion is promoting entrepreneurship and helping entrepreneurs. My personal goal in life is that I should be able to assist and encourage 100,000 people to be entrepreneurs in my lifetime. I work with a lot of student communities, helping them understand entrepreneurship as a career option and helping people understand what they need to do to be able to do that. I run a mentoring program for startups under the Hub for Startups, and what I help people do is think through their businesses to be able to build a good business plan around it. I'm available on this. I don't know if we have time for questions, but if we have, and if there are questions, happy to take it. Do we have time for? Okay, fair enough. Any questions? Happy to take that.
Hi, my name is Siddharth, and my question is, it's actually not a question, it's a request. Can we get a copy of that slide pack? I think it is very, very useful, what you've just presented.
Sure, I mean, it's available here. In any case, it's available on the, the Hub for Startups is where my blog is. You'll find all the presentations.
Okay, so this resource is there.
Yeah.
Oh, great.
Yeah.
Thank you very much. No further questions. Thank you.
Okay, great. Yeah. So, one second. I think the mic is coming in.
Hi, I'm Harvinder, and I am particularly interested in. Can you give me a list of all these 3 types of investors to begin with? Or do we have to do our own research on the internet?
Sorry, I
like you mentioned 3 types of investors, angel, seed, and Ps. Do you have a list of these, maybe a few, 2, 3, 4, 5, so as to begin? I understand that there may be hundreds.
So these lists are publicly available. You go to VC Circle, Your Story, and stuff like that. You'll see all the the investors listed. They are also listed. See, one of the biggest problems that investors have is that they get a lot more proposals than they can evaluate, and therefore most of the investor websites will clarify what stage they expect plans in. What are the kind of deals that what are the kind of sectors that they are interested in or not interested in, what are the stage they are in and stuff like that. It's not difficult at all. I mean, there are enough resources available today to be able to do that. And there is also an ecosystem of enablers in the country today. Irrespective of which city you are in, there will either be a TIE chapter or an NEN. NEN is National Entrepreneurship Network, things happening. And a lot of these forums are good resource centers for you to be able to do this. So if you can't find out, say, hey, look, I'm doing something in the agri space and I need to figure out who the investors interested in that would be. Now, I understand that would be a slightly difficult one to find out, but a local TIE chapter or a local NEN chapter would be able to, sort of say, okay, okay, let me figure out where you can do that from. There is a lot of help available in the ecosystem these days.
Thank you very much.
Okay, I think we are done with the questions. Thank you very much for your time. Much appreciated.